Hey everyone, Ian King here, editor at Smart Profits Daily, and I'm joined today by my friend and colleague, Mike Carr. Mike, how's it going out there?
Great. How are you doing, Ian?
I'm doing well. And before we get into today's webinar, I want to remind all our viewers, if you haven't subscribed to our channel, hit that subscribe button. And if you like what we have to say, please hit the like button. It helps other people see our content. And if you have any questions, feel free to leave a comment. Mike, some big news out this week, and I found this piece of economic data really interesting. I want to pull up this chart for our viewers. This is from Redfin, and it says the median price of homes sold by week has really dramatically increased throughout the summer. What do you make of this, Mike? Why is the housing market suddenly catching a bid here?
I think a big part of that is the drop in interest rates, which I think was also short-lived. We're seeing rates back up a little bit, but almost all of that gain is explained by the drop. So people, when they go to buy a house, the first thing they ask the realtor is, how much home can I afford? And when rates are lower, they can afford more home. So in a way, low rates are the market right now.
That's a great point. I also think there might be something to the extent of people moving out of cities to the suburbs, and outside of New York City, you're seeing a lot of areas and neighborhoods in New Jersey and Connecticut and Long Island specifically, just not having the inventory to support all the people that don't want to be living in the city anymore, especially if we could have another wave of coronavirus. Do you think this is some new urban flight or suburban flight phenomena that we could be seeing over the next decade?
I think so, and I think that happens all the time. Now, I'm a lot older than you and most of our viewers, but I remember when we had something called yuppies way back in the 1980s. And yuppies were going to live in cities, and they weren't going to have kids, and the cities were going to be the future. Well, by the 90s, they were out of the cities. They were in the suburbs, and they did exactly what their parents did. We're seeing the same pattern over and over again, where the city is hard to live in for most people. So this just accelerated the painfulness of living in the city. And you've spent some time in New York. I call it the paper towel problem. If you go to Costco and buy 12 paper towels, you don't have room to store them in a New York apartment. And once you get out of the city, you realize you like that storage space.
Yeah, I can speak from experience. We moved out of New York City 2 years ago down to Southern Florida. And, having a garage for the first time in my life has been life-changing. So you're right. We do tend to store so much stuff that we don't need. But, during a pandemic, you can't really complain when you've got more space in your house and you're stuck working from home. But let's move on. Another topic. There's a data point that came out today on retail sales. And this is just fantastic. Check out this chart of retail sales. So this shows that we've had a sharp bounce back in both retail and food services and the ex-gasoline number. Mike, are we back on trend here? I mean, is this a V-shaped recovery we're looking at?
It sure looks like it from that data. And, the consumer didn't go away. They were forced away. Now that consumers are allowed back out, they're more than happy to do what they were doing. And retail sales are strong everywhere except department stores, let's say. But if you look at the data by sector, sporting goods are up as people want to get outside and do hobbies. We're seeing increases in boats, RVs, expensive stuff. And we're seeing electronics as people upgrade their homes along with home improvements. It's across the board. It's just specialized. I don't know that department stores really have a place over the next 50 years.
Yeah, but I'm sure a lot of that e-commerce traffic is making up for the department store sales. But I think you're really correct. You are seeing an uptick in people buying boats and RVs, and a lot of it has to do with the lowered interest rates that we talked about. The same reason that's driving housing prices, and also the amount of M2 money that is now in circulation has been added to the bank's balance sheets is starting to flow through the economy. So, this does look like a V-shaped recovery right now. I don't want to jinx it just about now, but we are coming into a kind of seasonally weak period for the markets. And I know this is your expertise and you've got a lot to say about this. So, right now the markets are as calm as they could be. This is the polar opposite of what we saw in February and March. It just seems like every day is Groundhog Day with very low volatility. What should we expect in the coming months to end the year, Mike?
I know there's really no volatility in the indexes, but under the surface, there is some rotation. Mm-hmm. And we're just seeing phenomenally large moves in some stocks that don't always make sense. Yesterday, we had a hamburger chain, Fat, buy out another hamburger chain, and the stock almost doubled on the news. So there's a lot of opportunities to profit that was unjustified. So sometimes stocks are going to get ahead of themselves, and this is where, as you know, put options can really come into play. Being short-term in this type of market, probably safer than being a long-term investor.
Yeah, especially if we're going to see the type of volatility that we normally experience in the fall months, because a lot of traders are on vacation right now. It's the dog days of summer. Mm-hmm. Hedge fund managers are in the Hamptons, or if they can get to the Caribbean by their private jets, they're there. And everyone comes back in September. What's your outlook for the market?
September is historically the worst month of the year. And I don't see that being any different this year. There's a lot of profits on the table. Also, as you know, for managing money, when you have a lot of profits late in the year, you tend to take some of it off the table, because I'm not saying you did it, but a lot of people have their eye on their bonus, and giving money back doesn't improve your bonus. So you try to raise cash, lock in that bonus, and get ready for 2021.
Now, Mike, I wasn't the type of person that would just care about my bonus late in the year after we're having a solid year, right? But listen, if our viewers want to hear more about Mike's momentum and seasonal strategy, check out this link below me right now. You can click on it. He's doing a free webinar next week. Sign up for the hot list. I know you will definitely learn something, because I always do when I talk to Mike. And Mike, thanks for joining us this week on Market Insights. Any other thoughts for our viewers before we go?
No, I just think we're going to cover a lot of ground next week, and it'll be worth signing up to learn more. Thank you.
Awesome. I'm excited about it, and I will be there as well. I'm Ian King for your Smart Profits Daily Market Insights weekly webinar. Have a great weekend, and we'll speak to you next week. Thank you.